I'm Maurice and welcome to Things Invest. We'll talk about investing, finance, and professional development. For today's video, at 10% only. The investment topic today will be Ethereum ticker ETH. First, just want to say happy Wednesday, everybody. We're halfway through the week now. In respect to this morning around 9 a.m. on the East Coast in New York City, Ethereum's trading around like the $2,029 level right now, up about 0.75%. Ever since the 4 consecutive negative days that we've been experiencing ever since hitting that $2,600, selling all the way down to yesterday's level of the $1,697 level, driven by the negative catalysts that we've been having in a gradual fashion, right? Ever since that FOMC meeting. Subsequent to that, we had that James Bullard article on Sunday. And then subsequently again, with respect to the Chinese crackdown on the crypto mining initiative that they've been halting across the whole nations in China. So it seems like today we are, trending more of a reversal right now ahead of the Fed meeting they'll be hearing later today in Cleveland from Michelle Bowman, an event that's gonna show or give us some indicator from Michelle on her depictions around the economical outlook going forward, which serves as some sort of like a market catalyst, but not a substantial one, but something we need to look out for in case there's some sort of a black swan outlier that could be formed into the chart going forward. And in addition to that, another formations of catalysts that we're going to be experiencing going forward would be the expiry of options for Ethereum on this Friday coming up. So with respect to the option spread that we currently have in the market right now, the put options in the ratio perspective is about 0.79 versus the 2.1 that we're currently experiencing for the call options right now. In this respectively indicates there's a more call options outstanding versus put options, right? Approximately about 64,000 options more. And this indeed is an indicator of a bullish sentiment. However, the majority of these option contracts is held quite far away from the current Ethereum price point, which indicates a lower likelihood for expiring in the money. So despite the spread that we see right now, it seems obvious, right? However, with respect to the, this type of affectations, people sometimes counteract by maneuvering through their contracts by either pushing it out or adjusting the timing for the contracts that could subsequently have some affectations to obviously the supply and demand dynamics of the price point for Ethereum. So it's definitely a binary day on Friday. So is today, but today I would say it's more like a subliminal one rather than a direct one. Something we need to look out for. So I'm gonna go through a technical analysis to see what the level of resistance that we need to look out for in case we're gonna see more sell-off, or are we gonna see more of a pump coming forward, and my price target for you in 2021 as well. So stay tuned, stick around, let's make some money. So moving on to the technical analysis for Ethereum ticker ETH, you can see that currently, as I'm recording around 9:45 a.m., it's trading around like the $2,000 mark right now, down about 0.45%. So it's not really doing much. It's kind of consolidating on a sideways fashion right now. And just to recap on what happened 7 days ago, exactly on June 15th, which was the FOMC meeting that we had with Jerome Powell, that based on his positive depictions around the short-term economical outlook going forward, that the prioritization at the near term would be to sustain our job numbers, to sustain our corporate outlook going forward, and not to be tapering the economy, and not to enforce quantitative tightening that they were expecting to be doing, right? So the timeline is going to be shifting out to like somewhere around like 2023, around like Q2 Q3 time frame, which subsequently drive obviously some positive expectations to the equity market, while in comparisons it will subsequently anti-correlate to the crypto market, which subsequently drives some sell-off, right? And also on top of the fact that on Sunday, we also got another subsequent article from the Fed again, but this time from James Bullard, on his depictions around the economical outlook again, but it kind of contradicts with the timing that Jerome has depicted, right? James foresees that the tapering should be happening somewhere or sometimes around the end of this year or later in 2022, but rather than 2023 based on Jerome's depiction. So definitely like a 1 year time gap in comparisons in between, right? And then subsequently as the third whammy catalyst that we also got from yesterday, or not yesterday, 2 days ago on Monday, from China directly this time with basically the shutdown, the crackdown of the crypto mining infrastructure across China because of the environmental efficacy issues, from the environmental pollutions, stem from, obviously the electricity that you need to use to sustain and propel, the mining of Bitcoin, right? Which subsequently drives some concerns, which subsequently also provide a mandatory ban, suspension across all the financial infrastructure in China to shut down all the exchange on the commerce side as well for crypto, which obviously with this relatively macro news coming from China, obviously spread all over the world, which subsequently drive a lot of selling pressure across the world, including the US, obviously, right? And as of yesterday, we sold down all the way to the $16.97 mark. And this was basically a level that was expected, right? We kind of tested hover around like the $19-20 level, which if you look at it historically, we've tested this a little bit, but not in a substantial level, in a more of a subliminal level. And then we went all the way down to the $16.97 level. And by that point, we were highly oversold as expected, right? Because that was a level that we never really tested before. We have tested the $17.20, the $17.30 level to be more specific, that whatever goes down really fast comes up really fast. And I think the lucky ones like myself, and including some of you guys that are watching my channel have been following, have bought at the optimal level that you guys were looking for, right? And I personally bought in around like the $17-30 level. I bought 5 Ethereum to be exact, and I'm relatively happy. I'm actually up quite, a decent amount right now. Currently holding about 45 Ethereum as a whole. So I'm relatively satisfied at the moment, and these are the things that you have to do to dollar cost average, right? By risk mitigating, by understanding the technical analysis to counteract, to hopefully build that long term value proposition that you're looking for, right? So what's going to be happening going forward, right? I think currently, based on how the chart is set up right now, despite this like reversal that we've had, this is a pretty big reversal, right? Almost like a $300 reversal so far based on the bottom. And you could see the reason why the candle is so small. That's exactly why, right? Whatever goes down really, really fast from that 3 black swan events news that we've incurred so far, that people know enough that it's just the price was too low to not to just ignore, right? And that's why people bought in, including myself, including yourself. And currently, at this moment right now, contingent on more positive media affectation, contingent on the option expiry on Friday coming up, that is frankly more of a binary option right now, that we don't really know which way the market is shifting, right? Because we don't have any clarity as to how people are maneuvering their contracts, or with respect to the strike price that they have incur into the option contracts either, right? We don't have a lot of understanding or clarity around that right now, but we know that it's going to be a binary day. So how do you mitigate a risk of such a macro level? Is to have some good strong cash balance on the side, right? To dollar cost average if we fall, right? And if we fall, I think the potential level for us to fall back to would be somewhere again, right, with this level of the 1863, which we have tested sometimes on June 21st. And if we break that, I think the level we're going to be going back down to again would be the 1720 again. And this would be basically forming some sort of like a dead cat bounce, if you may, right? But I really don't think that's going to be the case, to be honest with you. I think on Friday, despite it being a binary day, that we can either go up really, really fast or go down really, really fast, depending on the volume of the contract that's going to be expiring on that specific day, that the rationale behind the momentum or the volatility is lack of substance, right? Because it's purely driven by supply and demand dynamics, right? It's basically people making a bet on the price level that they're going to be going to at a certain time frame, but rather anything that has to do with the value proposition or actual global utilizations of your Ethereum, right? So with that lack of substance as a form of catalyst, right, I would just risk mitigate by having cash balance on the side and counteract the momentum based on how you're going to be seeing on that day, and then strike the price or buy in at the ideal level that you've been looking for by dollar cost averaging to further risk mitigate. And I think that's the best way to play it, right? I don't think you want to be throwing a Hail Mary by like, oh, I know that that day is going to be up, that day is going to be down, because like we don't know. People maneuver through their contracts, right? So it's important that we understand. So in the near term, I do see some more of maybe consolidation, and by that time, as we consolidate more in a more longer time duration, the curve for the MACD should be slowly curving back up, right? On top of the fact you can see that the RSI is highly oversold right now. We are basically at the Earth crust. We're basically at the bottom of the ocean right now. That we're just kind of crawling away, right? Crawling away, and as we crawl away more, the MACD is gonna kind of cool down a little bit. That eventually, with some just like a little bit slight glimmer of positive mean affectation that we should be expecting in the following week, that we should be reversing backward very shortly, right? I think for us to go back down even more, knowing the fact that the market told us this story, that there's huge appetite around the level of this, anything below 1850 or somewhere around like the 1750, right? That's why the candle's so narrow. That's why the timing was such a sharp V-shaped recovery that you can barely see. And I congratulate to the lucky ones actually bought in at these levels, right? That eventually we're gonna bounce back and consolidate again at the $2,000 level, and then slowly go back to the first level resistance, right, the 2,150, and then slowly consolidate from there, and then retest the 2,250, and then continue the roll from there. And I think the oscillation is basically happening, but the oscillation right now is a little bit wider than before, right? So that's something to look out for, but that's the play in the near term that we need to be able to maneuver going forward. So Friday, the best way again, right, to is just have good cash balance on the side and counteract from there. If we pump up really big on that day, just be grateful, right? If we sell down really heavy that day, you know the levels to buy at then. Right, just to recap all the numbers that we just talked about in the technical analysis, I think the current level, the $2,000 level, would be a fair level to buy it if you want to think about this in more of a long-term perspective, holding for the next 2 to 3 years or even 5 years. But if you talk about more of a resistance level, with that caveat of the catalyst that's coming on Friday, that we have a potential to go back down to the 1860, knowing the fact that, the dead cat bounce can be happening based on how the MACD and the RSI set up right now, despite it being highly oversold right now. But we still have some room for us to scoop up to go on the MACD perspective, that the 1860 could be possible. And if we are going to be crashing down even more, 1750 can be a probability going forward, which, if we get there, that will be just another opportune time for us to dollar cost average, right? And are we going to hit like anywhere about like the $1,580 level? That would be a pretty significant sell off from there, knowing the fact that we have been down for about 40% so far. I think 45% yesterday when we hit that $1,694 level. For us to go down to this level would be not the most ideal, but we have to see, right? Because there's a major black swan events that is occurring coming on top of the option expiring on Friday that can drive a huge selling pressure across the whole market. Then we could potentially get there. But we have already sold out for such a long time now with this 4 consecutive sell-off that for us to go down at this fashion would not be the most logical, right? So something to look out for, but that's another level that we have tested before the whole rally to pump all the way to 4,000, right? We hit the 1580 and then we went to the 2100 and then we went from 2100 flow all the way to the 3100 and then got all the way to the 4400, right? So that was like the gradual fashion of that momentum. But whatever goes up really fast comes down really fast, and whatever goes down really fast comes up really fast at the same time. So if we get there, I think that's just another opportune time for us to buy at. So definitely, again, right, have your cash balance on the side. With respect to corporate adoption, 20%, 9,800, 5.3 times your money if you buy at the $1,860 level. All right, so that's it for there. Respect my technical analysis on Ethereum ticket ETH. Hopefully you guys find this helpful, and if you have any questions, feel free to reach out again. I'm always pretty responsive overall. And please hit the like button, the subscribe button, also the bell notification, and watch out for the next video coming up. Take care. Bye.